have Steve ready to go. All right, Dr. Pieczenik. So I was asking you before we lost you there, what do you think is the deal with the stock market? Is this just a legitimate correction? What goes up must come down? Is this because of the mechanized sell-offs that we know that these machines kick into gear when there's big routes like this? Is this a correction, or do you think there's some more nefarious activity here? Do you think maybe deep state globalists are trying to tank the market to make Trump look bad? Dr. Pieczenik.
Thank you very much, Owen. It's really quite a natural progression of events. What's happened, and Trump has said it very clearly, we are going down in the market because we've become very successful economically. And what that means, it sounds paradoxical, but it's not. What that means is our unemployment is very low. It's the lowest we've had in history. Our interest rates are going up somewhat in order to curtail the amount of liquidity that we have in the markets. But at the same time, what happens is the market is not used to this kind of expansion that it had over the past 6 months. So it's pulled back in a very natural way. And as you said, then the quantum analogs, the machines, kicked in because at the same time we had increased GDP and at the same time increased internets. So the analog computers came in and shorted a lot of the stocks. Now, I'm a day trader, which means I got hit very badly, but I went back into the markets today because it's going to be quite successful. It came back 10%, and it will go up another 10% by next week. The reason for that has to do with the dynamics of the movement of the market. There's nothing nefarious. Number two, what has to be understood is that the stock market is about 6 months ahead of the economy or the political dynamics of our country. So what we're watching right now is an ongoing global expansion of the economies in every part of Europe, China, and the Soviet and Russia, and at the same time our own economy. But because we've had inflationary pressures underneath the increased amount of job payments and the fact that more people are making money, we've had to curtail the liquidity so that we don't get into an inflation spiral. As a result, the stock market pulled back and then went into a 10% pullback. It will come back within the next week or so. There's nothing nefarious about it. I have a very good feeling about it. Matter of fact, I'm investing now in potash, in Mosaic Mine, to make sure that the farmers are using potash, and they use a stock called Mosaic, and they just increase the amount of consumer agricultural products that they need in order to have their markets effective in March and April. So stock life, which went from 35 to 19 and it's at 24, I will go and go long on it till about 27, 28, 29 within the next week. So I have a vested interest, and I'm saying this without being, wishful thinking. I'm a realist. It's very hard. Let me add this, Owen. It's very hard for millennials to understand that when you're getting into the market and many of them have put in their savings and then suddenly they get hit. They have to understand that that's the natural dynamics of a very powerful economy. And our economy is not slowing down. On the contrary, it's really growing, and it will continue to grow independent of what you see in the markets. And the markets will reflect that.
The day trader telling the millennials to be patient and go long. Is that what I'm hearing here?
Yes, correct. And the answer for that is, millennials, they've garnered their wages, they've garnered and have put it into a 401k, and suddenly they got hit, let's give an example, from $35,000 in their IRA account or 401k account, and they went down to $19,000. Eventually that market value will come up to 24, but if they're patient and they can go in now and buy at a lower price.
Well, that's what I was going to say. Then wouldn't now be the time to buy when you see these corrections and you see these steep, slopes in the day? Isn't now where you buy late and then you play long?
That's exactly right, Owen. So when we play long, let's explain it to the people. We're buying in the anticipation that the stock will go back up another 10 to 20 to 30%. In the case that I buy Mosaic and when I buy options, I expect it to go up 20, 30% within the next couple of weeks because I've seen the pattern of its movements going down and up. if you're not a day trader, then you want a more stable stock, or you want something that you can depend on with a dividend, but that will pull back as well. And then when it comes down in value, you have to start buying it. So in a way, Owen and Alex, you could have your own, we can have our own economy section like Kramer. We can discuss the stocks, but you're
Kramer was fired up today. I don't know if you saw his ranting.
I don't really watch him, but he was a day trader. I'm a day trader. I was in the investment banking world. He was in it. And you have to understand that the economy is a viable organism. I mean, it sounds weird because it's all about numbers, but it really is a reflection of the vitality of our republic. And irrespective of Trump says or Nancy Pelosi or anybody else, the economy reflects the underlying confidence that the businesses have in what's going on. And remember, as I said to you, we're in the stock market. We're 6 months ahead of what's happening in today in the reality of the world of politics and national security.
It's funny because when you look at the stock market, I think that you just said it perfectly. I personally, I've never been one to get involved in the stock market. I don't really have the time. I feel like if I was doing a day trading thing, I mean, that's the kind of thing you really got to be on top of so you don't lose everything in one bad deal. You have to look for these trends. But when you look at it and you think about it from the confidence standpoint, that's what people don't really talk about enough, because it's why do you call it Trump's economy, or why do you call it Trump's stock market? Well, it's not because Trump said something. It might not even necessarily be because Trump did something. It's because of the movement and the trends that appear like, okay, well, wait a second, American manufacturing is back. I mean, Boeing, I think, is the perfect example. I mean, you look at what Boeing stock has done in the last year and a half. I mean, you're making out like a bank robber. I mean, you're making out like a bandit if you've stuck along with Boeing. We've got Steve Pieczenik for another segment. Don't go anywhere. We're talking stocks. Maybe we get into the deep state a little bit on the other side. This is The War Room. All right. Well, Steve is, Dr. Pieczenik is doing a little dance right now. I'm assuming that's not because he did well in his day trades today. As I was speaking in the last segment, though, guys, pull up that graph of Boeing stock that we've seen here. So this is what I've been talking about. This is a good measure, I think, of if you play your cards right in the long run and you go with the smart bet, you cannot freak out when you see a flinch. You cannot freak out when you have a hesitation in the market. Even Boeing, down 5% today, is up huge in the long term. These are some of the stocks I've been monitoring. Of course, people, you can see the pattern here. Lockheed Martin, Boeing, Halliburton. These are stocks that continue to go up, Steve, but in the long term, these are the stocks that win historically. Would you say, for someone who's young, a millennial who maybe is interested in the stock market now because there's so much success there, so much energy and hype there, wouldn't you say, as you said in the last segment, now's the time to buy low? Now's the time to say, all right, here's where I'm going to buy at, and then here's where I want to get out at. Don't monitor it every day. Say, all right, I'm going to get in at Boeing at 3:30, but I'm not going to get out till 4:30.
I think that's a good point, Owen. Number one, before you go into the markets, particularly this week and next Monday or Tuesday, we have to see how far the market has bottomed out. So one of the things that you brought out, which is very important, is for the millennials and others to understand that there's a certain pattern where we go very high and then we go to low lows. And even on Boeing, that's not the lowest price that Boeing is going to hit tomorrow or even on Monday. And what we expect is after 10% pullback, there'll be a rebound coming in about Monday, Tuesday, or Wednesday. If that doesn't occur, then we have a very strong bear market, which means you can lose more. Remember, our economy is based on entrepreneurship. It's not a guaranteed life pension. And I've got to make a mention of that to everybody who has a pension. With all due respect, I don't want to create fear, but the reality is those pensions are managed by very sophisticated hedge funds and investment bankers who depend on high-frequency trading and analog computers. So you cannot assume that suddenly your $1,000 is going to be there in the pension fund when it literally came back to 500 or 250. So your listeners have to become somewhat sophisticated, and we can teach them on a weekly basis as to what they have to look for and what they have to ask. If you're a teacher, a policeman, or a fireman, don't assume that your pension is fully intact and fully funded and that it's growing on a percentage basis. What I don't want to get into is the notion that you're getting a certain percentage of the investment and it turns out to be a Ponzi scheme. And I don't want to frighten anybody, but that's one of the issues you have to be careful about. I would say to the millennials and others to start with smaller price stocks. Those are like Mosaic 24, 25. You're talking about AMD or Intel. And there's a rotation that goes around from technology to farming to computers to software to internet security. And that's the kind of issue that you have to learn about. And what it does is allows you to understand what we're about in America and why the Alex Jones show, the Owen Schroyer show is exceedingly important. It's because we don't have an agenda here. I'm not telling you to buy stocks in this case or in that particular industry.
Yeah, we're not invested in any of this stuff, at least for our own gain, if someone else out there invests.
Correct. But you said it correctly, Owen. In a way, you could be the model for the young people to explain to them, look, one needs to be involved and engaged in creating one's own assets or one's own fortunes. It doesn't happen overnight. And the notion that you will have a job for the rest of your life is gone. That is no longer in existence. We live now in what's called the gig economy, GIG, which means that you're going to have part-time jobs, you're going to work from home, you're going to work on the computer. Therefore, you're going to have to learn how to create some assets that are valuable to you. You can have it in the market, you could have it in real estate, you can have it in startup companies. It turned out.
So is this like a new wave? Are you saying there's like a new wave of entrepreneurship happening here?
Yes, Owen. In fact, it's so exciting. That's why I love being on your show, because you do represent the millennials and you understand what's happening. What's happening is that the economy has completely shifted away from the old line notion that the unions will take care of you, you'll have a pension, the firemen will be fine, the policemen will be fine, the teachers will be fine. No, none of that is really guaranteed. What's in fact the problem is that you're going to come into an economy where even if you're a medical doctor, it doesn't mean that you're going to make a living or living commensurate with the amount of education. What it means is we're entering into an age where the internet is literally leaping in capability. So, for example, one of the issues that's coming up is not just binary numbers 1 and 0, but a sophisticated notion of what we call quantum encryption, which is a very sophisticated notion of how to maintain security within the internet. So we're beginning to move rapidly. There are new companies. Oh, is that all right? Do you hear me, or is that?
We lost you for a second, but you're still good to go. I didn't realize that. I didn't realize how fired up you were about stocks. It's actually kind of cool for me. You're a very how do we say savant on all things related America right now, Steve. Even though you took down the wooden American flag behind you and put it up with a Dr. Seuss reject. I still think the audience is enjoying the background. So let's stick with this stock stuff real quick because there's some news going around. Let's go to Twitter. So first you had Twitter last week, or I guess earlier this week, announcing that they were making a change to their algorithms and retweets and everything. This is an effort to stop bots. Of course, we know who the bots are. The bots are just Trump supporters. The bots are just conservatives on Twitter, but they just call them bots. And then today, the news is that Twitter delivers its first profit ever, Steve, and surges to 22%. Something seems fishy about this to me. This raises red flags to me. How all of a sudden is Twitter turning a profit for the first time when they're in the middle of a censorship and a purge transition, and now all of a sudden they're turning a profit? I mean, I don't know. What do you see going on here with Twitter's profit for the first time?
I happen to invest. I invested in Twitter when it came out, and I thought it would do well. There's a problem. When you look at a company like Twitter, which I happen to use, but it doesn't mean that it's financially viable. There is a viability issue with Twitter, and that is they do not know how to make money. They do not know how to monetize the 124 characters that are existing. I had the notion that with Trump using Twitter, it would go up in price. The net asset value would go up and all. I have not followed Twitter. But from a point of view of monetization, Twitter does not carry enough advertisers to sustain a growth that is viable. In turn, you have